Oh, right. Today is Wednesday, the 26th of October. This is a recap for the stock market activities today. And folks, I got a good one for you tonight. And let's start by this. I don't know if you caught this headline or not, but the world's dirtiest man. Well, he's dead. Rest in peace. And the man lived all the way till he's 94 years old, no problems, didn't take a shower for 50 years. No problems. Still kicking. And the moment he takes a shower, boom, he drops dead. And what is the moral of the story here, folks? The answer is stick to what's been working for you. For example, the moment I look at the market and I say, okay, the dollar is going down, perma bulls like Marko Kakawanovic are capitulating, maybe I should buy equities here. Maybe I should go all in and start buying the RKKs of the world and the tech companies. But I know the moment I go along, that is the moment when the market crash is going to resume. So stick to what's been working so far, at least to me. You can do whatever you want to do. Doesn't matter to me. And with that out of the way, we got a good discussion here, folks. So let's dive right into it. And here it is, in focus tonight. How about the Meta bomb? Meta has been dropping bomb after bomb after bomb, but this one happens to be a nuclear one. And then how about the Bank of Canada? It's not 75 basis points hike, it's 50. A leading indicator for the Fed? Question mark. And then how about the debate that we got last night in Pennsylvania, Fetterman versus Oz, and the implications on how the Senate race is changing. But we begin with Meta, and give us a live shot on how Meta's trading after hours, and ooh. Oh, no. Okay, that's enough. Tone it down. The name lost almost a quarter of its entire value in a single day. We're talking about billions and billions and billions of dollars. And if we measure the crash from top to bottom, and who knows where the bottom is in Meta, it is the biggest crash in stock market history. We have never seen a loss of wealth this big in a single stock ever. But maybe Tesla will break Meta's record at some point. Anyways, why did Meta crash? Here it is. Revenues down 4% year over year. On the other hand, costs and expenses up 19% year on year. Unbelievable. The gap between the growth in revenues and the growth in costs and expenses is unbelievable. And the reason is this metaverse lunacy. Now, we know that options are exaggerating the move to the downside. The bears are attacking. I could see it live today. I could look at the options grid and I'm saying, okay, the bears are attacking. They're going all in, buying puts. They're going to hit this name big time after the bell. And I thought about it, should I buy puts? But the premiums are insane. You're paying $7-8 for the expiration date of Friday. No thanks. But it's also a message for market participants and investors saying, hey, Mark Zuckerberg, enough. Tone it down with the metaverse lunacy. You're crashing the company. These are unacceptable results. And you could say you're investing in the future, blah, blah, blah. Who cares? This is a big risk, a big gamble, and if it doesn't work out, say goodbye to the entire company. Does the man even understand the risk that this metaverse lunacy entails? After investing billions and billions and billions of dollars in this fantasy, this lunacy, a glorified video game. If it doesn't work out and all of us don't move to the metaverse, it's the end. There's no other way to look at it. The operating margins for the company went down from 36% to 20%, a massive downgrade in the operating margin of the company. No wonder why the stock is collapsing. When we look at the net income, a disaster, down 52% for the year. The numbers are speaking, and the numbers are saying this is a bad trend, and if Zuckerberg doesn't stop now and announce immediately that he's done with the metaverse crap, he's going to limit spending. If it works, it works. If it doesn't, it doesn't. But from this point on, he's going to concentrate 100% on the core business of Meta, aka Facebook. If he does that, the stock will shoot up higher by 20-25% in a single day. But absent of that, the bleeding will go on. And folks, I'm not going to spend a lot of time talking about this because I produced multiple videos about this subject. One of them about 2 weeks ago, the beginning of the end of Mark Zuckerberg. And then earlier this year, I made another video, the biggest crash in stock market history. $250 billion lost. And that was 8 months ago. Now we're talking about $500 billion. Poof. gone. But of course, the market is going to shake it off once again. Who cares about Tesla crashing? Who cares about Snapchat crashing? Who cares about Microsoft crashing? Who cares about Alphabet crashing? Who cares about Meta crashing? Who cares about Apple Whoops. Maybe that one will be the final wake-up call. We'll see. In the meantime, we have to talk about the Bank of Canada because today the BOC increased rates by about 50 basis points against the expectations of a 75 basis points. And this is not the only central bank, by the way, that downgraded interest rates hikes. And the question now becomes, hey Maverick, isn't this a leading indicator that the Fed will do the same in the next meeting? They're going to go with the 50, not the 75? Before I answer this, the action by the Bank of Canada added a lot of pressure on yields in the morning. The 10-year went down big. And of course, when yields go down, equities go higher. This is the algorithmic reaction. Whether it is justified or not, that's a different story. But when the dollar and yields go down because the market is expecting the Fed to be kinder and gentler, right? Because the Bank of Canada came out kinder and gentler. This is what the market thinks for now. I say, if the Fed pivots and does the 50 instead of the 75 right before the elections, they're going to lose a lot of credibility. You want to talk about the Fed playing politics? Why the move down? When you've been broadcasting to us over and over and over again that you're going to go with the 75. Why before the elections go with the 50 instead of the 75? This is politically motivated, especially after the pressure from these politicians who came out yesterday and said, Mr. Powell, please tone it down. We're going to lose the elections. And by the way, my portfolio is down about 20% for the year, so take it easy, pal. I think the Fed will lose an immense amount of credibility. But here's the catch. Unless something happens before that, something that merits the downgrade from 75 to 50. What is that something? The answer is, how about the core PCE on Friday? If the cooks at the bureau give us a tamed down inflation reading on Friday, of course the Fed will go with the 50 instead of the 75. But this is all going to be part of a plan. Because there is no way the core PCE went down month over month. No way. Gasoline prices went higher month over month. Food prices went higher month over month. Medical costs went higher month over month. There is no way, absolutely no way, the core PCE should be down month over month. No way. But the cooks might do whatever they're ordered right now. And if they are ordered to give us a tamed down reading of inflation, they're going to do it. And the market is going to rally big time. Dollar is going to go down, yields will go down, and the Fed will say, okay, we can do 50 instead of 75. And they will think that this is going to work. Unfortunately for them, when the dollar goes down, commodities will go higher. Oil will go significantly higher. A lot of funny stuff is about to happen. So buckle up your seatbelts. That's all I'm going to say. And then we have this Oz versus Fetterman debate that we got last night. I don't know if you watched it or not. What a tragedy. You want to talk about, that was the ultimate one. It was painful to watch. And now the talk is that Fetterman was all over the place. Obviously, the guy's not healthy enough to get a job at the Senate. What's going to happen here to the outlook on who's going to take control of the government? We know the GOP will recapture the Congress. That's for sure. That's in the bag now. But the odds for the Senate was 50-50 until we got the debate last night. Because if Fetterman loses and Oz becomes... By the way, we got a fake doctor running against a heart attack patient. I mean, you can't make this shit up. It's like watching a dark comedy. But anyways... If Oz becomes the senator, then the likelihood is the GOP will control both the House and the Senate. Now, what are the implications on the policies, specifically energy, taxation, maybe the pressure on the monetary policy, the war in Ukraine? All of these matter to the economy and the stock market. Now, I'm not going to talk about this in depth because I'm going to do a video about the elections tomorrow. We're going to go over the midterms, race by race, looking at the odds, who's going to win, who's going to lose. We're going to discuss the implications all of these policies. But look at what happened here after the debate that we got last night. Before the debate, it was pretty much 50-50. The odds were either Fetterman or Oz is going to make it. Nobody knows. After the debate, Oz took a significant advantage. He's now the favorable to win. Meanwhile, the odds for Fetterman went down big. But is it over? Maybe not quite. We're going to talk about all of this in tomorrow's video. But for now, I just wanted to make a quick commentary here before I move on to the stock market coverage. We begin with the closing of the indices today, and here we go. The Dow Industrial Average closing pretty much flat, up by 2.37 points, or a gain of 0.01%. It was trading a lot higher in the morning, but then came the meltdown all the way till the end of the day. And folks are asking what happened. I think what happened is oil shot up higher. And when oil shoots up higher, inflation expectations shoot up higher, and so do the expectations of Fed rate hikes. But anyhow, it's not a surprise that the Nasdaq is the underperformer today due to Microsoft and Alphabet, down by 228.12 points, or a decline of 2.04%. The S&P down by 28.51 points, or a decline of 0.74%. When we look at the sectors' performances today, leading the pack, the inflationary trade, materials at number 1, capturing the gold medal, and number 2 for the silver, energy, number 3 for the bronze, healthcare. On the other hand, the laggards, communication services, and technology. We got a defensive theme today, a value kind of day, a Maverick of Wall Street kind of day. When it comes to the advance to decline ratios, the NYSE 62% advancing versus 36% declining. And despite the fact that the Nasdaq was down big, the breadth was actually pretty good, 59% advancing versus 38% declining. And the reason is the big cap were down big, therefore the Nasdaq is down. The weighting of these big caps in the Nasdaq is really heavy, and therefore we see the index down, yet under the hood, the breadth was pretty good. When it comes to commodities, look at this. Dollar goes down because the sterling is up. Sunak optimism. How long will that last? Well, I'm going to show you in the charts analysis, but when the dollar goes down, commodities move higher, specifically energy commodities. And today we got a massive big day to the upside in the WTI, up about 3.5%, and then Brent scoring gains of 2.75%. Yeah, inflation is peaking, right? Inflation is going down all over the place. As the good professor from Wharton, Jeremy Siegel, says, inflation is going down in real life. The Fed has to take it easy, otherwise my portfolio will go down more. Anyhow, the gasoline RBOB on the flat line, nothing to see here. On the other hand, heating oil futures up about 5% for the day, and then nat gas with modest gains of about half a percentage point. And of course, they talk about, oh, Europe is fending off the energy crisis because they have huge stockpiles. Folks, one storm away, that's it. And then what happens in 2023? And by the way, how the hell did the Germans top off their natural gas supplies? We know Qatar did not supply them with natural gas. We know Norway did not. We know it wasn't the US because the Freeport facility is down. So who did supply the Germans with all of this natural gas all of a sudden? How about Russia? Yep, and this is a tinfoil hat kind of theory because Turkey came out a few days ago and said, hey, we have a mysterious about $20 billion plus in our accounts. Where did that money come from? How about Russia supplying the gas to Turkey? Germany buys from Turkey, the money goes back to Russia, and Turkey cashes in a processing fee. Yep. But the good news here for natural gas bulls, when we talk about the debate in Pennsylvania, even the Democrat Fetterman said that he's now pro-fracking. Now, we know that senators are not going to set the policy of fracking in Pennsylvania, but again, this is bullish news that we might see supplies coming out more out of Pennsylvania. If that is the case, the natural gas companies, a lot of them in Pennsylvania, will be able to get more gas out of the ground and supply European consumers. This will be good for natural gas prices here in the United States. And by good, I mean for investors, not for consumers, because your gas bills will go higher and higher and higher. But back to the futures. What's going on here in softs? Down day for coffee. Coffee keeps going down. Today, it lost about yet another 3.25% almost. Good news for coffee enthusiasts. And with coffee comes sugar, and sugar is also down about 1.5%. And then we have modest declines for cocoa and cotton futures, all under 1%. And then lumber with a modest decline, almost in the flat line. And the winner for the day, once again, OJ, with gains of about half a percentage point. When it comes to metals, the dollar is down. Gold is up, silver is up, platinum, copper, palladium, all in the green. Some massive gains here for copper, almost 4.25% for the day. Likewise, platinum, also 4.25% worth of gains. More modest gains here for gold and silver, but regardless, good day for metals. Good day if you have calls on Freeport McMoran, right? FCX. And then we have meats, flattish across the board, be it live, feeder cattle, or lean hogs futures, all flattish for the day, be it in the green. When it comes to grains, the winner once again, oils, be it soybean oil or canola. We have a shortage of sunflower oil, so the substitutes go higher. And then we have modest gains for wheat under 1%. On the other hand, flattish activities for corn and soybeans, while we have sizable declines for soybean meal futures down about 1.5%, and then more modest declines for both rough rice and oats futures. On to the big casino, the options market. What's going on here? Note number one, the volume is up big time. Be it for Apple, for Tesla, for Alphabet, for Meta, for Alibaba, all over 1 million contracts traded today. But at number one, Tesla, with around 1.1 million contracts traded today, about 51% of those were puts. We have a mini gamma squeeze combined with a short squeeze in Tesla, and therefore the name is outperforming. At least for now. But all of these contracts will expire this Friday, so they're going to start dumping, let's say, by tomorrow. And then we have Alphabet, number two, with around 1 million contracts. About 53% of those were calls. And at number three, Alibaba, with around 1 million contracts traded today. About 68% of those were calls. Now be careful with Alibaba, because I know a lot of you want to catch the dip and make a quick buck. But always be closing if you have calls. You made a quick buck, in, out, hello, goodbye. Because this is going to go down big again. All what you're riding on right now is short covering, aka profit taking. On to the unusual activities that took place in the options market today. We begin with the ticker FXI. This is the Chinese ETF, Chinese technology that is. It's down big after the Xi for life optimism, but now somebody's making a massive bet that the FXI will rally higher. The bottom is here, and they bought the 24 calls for the expiration date, January 20, 2023, that is, with expectations that the FXI will move higher and gain more than 5.5% by then. They paid around $1 a piece to enter this trade, all in all spending around $9 million. I say there is a good chance they're going to eat a $9 million worth of pies. But anyhow, what about the OIH? This is the Oil and Gas Services ETF. The name is up big for the month, to the tune of over 50% worth of gains in a single month. And of course, these are names such as Valero, such as Schlumberger, all the names we've been talking about in this channel for a while now, but somebody sees a pullback coming. They bought the 255 puts for the expiration date, January 20, 2023, once again, with expectations that the OIH will go down and lose more than 13% of its value by then. They paid around $12.50 a piece to enter this trade, all in all spending around $20 million. And then we have the ticker CSCO for Cisco. We got some earnings from, ServiceNow. It's up big after hours, and I think SAP did pretty good before the bill, I should say, and as a result Cisco also moved higher, and somebody sees more gains to come. They bought the 47 calls for the expiration date, November 18th, with the expectations that the name could move higher and gain more than 6% by then. They paid around 70 cents a piece to enter this trade, all in all spending around $560,000. And lastly, at the bottom of the table, what about the ticker RRC, Range Resources, a natural gas name? Somebody sees more upside here for the name, and they bought the 32 calls for the expiration date, December 2nd, with expectations that the name could move higher and add more than 14% worth of gains by then. They paid around 90 cents a piece to enter this trade, all in all spending around $700,000. What about the heat map? Mixed. The big caps are melting, down big. Microsoft down almost 8%, Google down almost 10%, Amazon down over 4%, Meta down over 5.5%, and Apple down almost 2%. Now, based upon that, you would think a disaster happened in the stock market today. Quite the contrary. These names were down, some of the chips were down, the software names were down, but the value corners of the market did pretty good. We're talking about healthcare, we're talking about energy, we're talking about materials. Of course, the commodities related stocks are moving higher because the dollar went down, but we're seeing some action in industrials also moving higher. The credit card companies, Visa, MasterCard, up big. Visa reported after the bell yesterday. And of course, the consumer has been swapping those credit cards up and down, up and down, up and down. And it showed in Visa's earnings. But we also got the Chinese names rebounding. Alibaba, Pinduoduo, JD, Tesla. All of these Chinese companies moved higher today. And then we got Netflix, NFLX, also continuing to blast higher. Short covering going on here. But watch out the chart, because it is getting a little overbought here. So maybe we're getting close to the time where we should buy put options and catch the pullback. Now let's talk about some corporate news here, and we start with the souffle, Tesla. You know, Reverend Elon is now closing in. He's gonna buy Twitter for sure. He was in the headquarters today with a sink, telling the employees to let that sink in. Get it? What a dork. But anyways, now in retaliation, the United States is opening a criminal probe over Tesla's self-driving claims. Why now? Because we've been saying this all along. We've been saying the regulators should investigate Tesla. They have been getting away with murder for years, and the regulators did not do anything at all. In a coma. Critics, or excuse me, crickets. And the reason is the politicians, the judges, the regulators all happen to own shares in Tesla. But now that the guy is defying their rule by buying Twitter, all of a sudden all of these investigations are now on. And since we're talking about the Rev, he doesn't want you to track his jet anymore. He doesn't want you to catch his hypocrisy. Elon is saving the planet. At the same time, he's taking a private jet for 5 minutes, 10 minutes at a time, going to the ice cream shop and then going back home. And speaking of Twitter, the headline reads, Twitter is losing its most active users. Internal documents show the bots are running away now that Elon is in. Those are the most active users. And since we're talking about the Meta disaster, they also own WhatsApp, and WhatsApp was down yesterday worldwide. But you know, when we talk about Meta and Snapchat and Alphabet, YouTube, all of these companies, they're getting slaughtered. Why are they getting slaughtered? For example, when I say, folks, join my membership program, iPhone users say, I don't see any join button. I don't see any link here that I can join your membership program. You know why? Because the iMob, baby. The iMob want the 30%, aka the rent. The rent.
Came for the rent. The rent. The rent.
Every transaction that takes place in an iPhone, the iMob wants their cut. 30%. You can't pay me or pay YouTube without paying the iMob, the racketeering operation. And this is impacting Spotify negatively, Shopify, everything. Every single app has to cut the iMob in. If you happen to be an entrepreneur, any business these days, you need an app. The majority of users are iPhone users. So if you're going to have an app, you got to cut the iMob 30% out of your revenue. And then you're paying another 40% for the government. What do you have left? The iMob single-handedly is crushing entrepreneurship in this country with the racketeering operation. But of course, the politicians are not going to do anything at all because, again, the cops, the judges, the politicians, the president, all of them own Apple stock. And I always said that the racketeering operation by the iMob pay us the 30% or otherwise we'll crack your kneecaps. We'll ban you from the store. I said that this is all a facade. This is a cover-up for a company that is maturing, that is losing an enormous market share. iPhone sales are dropping, iPads are dropping, everything is dropping. So they have to resort to the racketeering revenue. And now the iMob is getting even more desperate. The headline reads, Apple puts more ads in the iPhone's App Store. A leading indicator for the report we're about to get tomorrow? I don't know. I'm just saying. And then we have the fallout of Kanye West. And now we have Adidas terminating the Kanye or Ye relationship, just like Kim K. But it's going to cost them. The headline reads $250 million. Other estimates say $850 million. Some would go as high as $1 billion. So this is going to be a massive, massive hit for the company and the stock, which is already down big. But here it is, the heat map analysis for the ETFs. What's going on here? Mixed picture, but again, look at the contrast between growth and value. Growth down big, the IWF. Meanwhile, value, the IWD, outperforming in the green. And the majority of the outperformance came from commodities. The XOP, XLE, OIH, all blasting higher. But we also got some action from healthcare. XBI, biotech was up big today. XLV, the big pharma names, the big insurance names also up big for the day. And then we have, of course, the dollar sensitive ETFs, materials, XLB, XME, the consumer staples, XLP, also blasting higher. But also when we talk about gold ETFs, GDX, gold miners, up almost 3% for the day. And then we have solar, the ticker TAN, was up big for the day. When it comes to international ETFs, the EWZ down big because we have the elections on Sunday, once again, the runoffs. On the other hand, Chinese ETFs catching a rebound, the FXI, MCHI, all up big for the day. And the theme, as I said before the week even started, if they're going to catch a relief rally based on Fed pivot optimism bullshit, it's going to be because the dollar is going to go down and yields will go down too. And if the dollar goes down, easy peasy. You go long energy. If yields go down, once again, easy peasy. You go either real estate, utilities, or you do what I did and go with the XHB home builders. Now, home builders were down today, but they're up big for the week so far. At some point, though, when the dollar continues to go down and we see energy and commodities moving higher, the market all in all is not going to like it. So watch out for that. Not to mention, of course, Friday's report, the PCE, that could move yields higher again. That could move the dollar higher again. In the meantime, we have to cover charts here before we wrap it up. We start with SPY, 30 minutes chart. What's going on here? We got the gap down, no surprise here, but then came the dip buyers. all in. Heads first, Naruto style. Buy first, ask questions later. Matter of fact, don't ask questions at all. Google down by 9%, who cares? Microsoft down 7%, who cares? Put your blindfold on and buy. Because the Fed is about to be kinder and gentler. Wait till J. Powell crack your little head with a kind and gentle hammer next time around. But anyways, any damage done here? Number one, the bulls got us all the way above 385.15. They got that as support, but then by the end of the day, they lost it. So that's bearish. That's not bullish. However, they did not make a lower low by the end of the day. They pretty much closed it flat. Now, the pressure is mounting with all of these bombs from earnings, but I caution you not to fall into the trap by becoming bearish too soon. Because what if this happens? What if the chart goes down because of Meta and it goes all the way down to 379.5 and then it moves higher again? It consolidates within a range. That is entirely possible. We need to see losses of more support lines before we become bearish with conviction. You need to see this. You need to see perhaps the chart going down to 379.5, catching a rebound, and then it goes down and loses that support line by the end of the day. Then we go down to 373.5, but even if the chart goes all the way down there, you cannot really go all in buying puts because the chart could catch a rebound from that point on, consolidate, and then move higher again. We need to see more stuff. We need to see earnings bombing more. We need to see Apple bombing. We need to see the core PCE coming higher. We need to see the dollar moving higher again. We need to see yields catching a bottom and moving higher again. Then you'll get it. Perhaps by that time the chart would be at 368 and heading all the way back to the June bottom. But for now, the bulls have the advantage. No doubt about it. When we look at the daily chart for the continuous contract for the SPY, any damage here? Not at all. The chart initially cracked above the resistance of 3,855. It did not make it. It went down all the way to the support, the yellow trend line, and it closed positive for the day. No harm done here. The momentum indicators remain positive and the volume went higher on the buying side. For example, if we zoom in to a 30 minutes chart, you can see the majority of the volume came in the morning. This is another sign that the majority of the flow that we're seeing right now is institutional. It's algorithmic and it is institutional flows. You can put the tinfoil hats right back in and say, okay, this is right before the elections. They want something. Whatever it is, doesn't matter. They're pumping a lot of cash right now. And of course, they're pumping cash with the blindfolds on. It's not their cash. It's the client's cash. The retirees, the pensioners. But who cares, right? So long as the managers make the bonuses, baby. But anyways, here's the cues. 30 minutes chart. What's going on here? Yesterday, we talked about the gap down. This is a no-brainer. We got the gap down. But I also cautioned that they might shrug off Google's crash. And indeed, they shook it off. No problems here. They went above 280 once again. Who cares about Google crashing? But then, short of closing the gap, the chart reversed and went down and it lost 280 as support. Now, is this bullish or bearish behavior? The answer is, it is bearish behavior, not bullish. However, by the end of the day, the chart did not make a lower low. It closed flattish. And even if the chart goes down tomorrow, gap down because of Meta, who's to say they're not going to shake it off again? And we see, okay, the Meta crash, who cares? Buy. And the chart goes higher again. The bears are not going to be emboldened to bet against the Qs until we see 269.29 gone for good. And for now, we're not there yet. Keyword yet. And here's the daily chart for the Nasdaq's futures, the continuous contract. Again, any harm done here? Not really. The chart went all the way to the resistance at around 11,689. Did not make it. Closed at the lows of the day, but within the range of yesterday's trading. Yes, it is an ugly looking candle, perhaps a reversal candle, but without a confirmation, you cannot really go with it. And even if it is a reversal, and the chart goes all the way down to the June bottom, 11,058.5, we still have the talk about a reverse head and shoulder formation. And therefore, you might have noticed that my strategy so far in this Fed pivot optimism rally, whatever it is, not to go all in shorting stocks right now. The strategy so far has been going long oil and gas, especially the refiners, the Valeros of the world, the Slumberjays of the world, the commodities, because this is what's working right now. Once they crack below the June bottom, once again, we know that this is not a good support. We're going to see the flush down. That would be the moment when you go all in and buy puts across the market. But for now, you got to be really, really careful and most importantly, surgical in your trading approach. Because yes, the momentum is slowing down a little bit, but it remains positive in the Qs. The volume is going higher, mostly on the buying side. You got to be really careful here if you happen to be bearish. When it comes to the IWM 30 minutes chart, what's going on here? We got the bull flag. We cautioned that the bull flag might not play out. It didn't play out in the SPY. It didn't play out in the Qs, but it did play out in the Russell 2000. So we have mixed messages here. The Russell went higher and then it reversed, but it closed positive for the day. It outperformed the SPY and the Qs. Is it lagging once again, or is it leading? We go back to the same argument. Now, I don't buy the crap of the IWM being a leading indicator. If anything, so far it has been lagging. But the fact that small caps were up for the day, the riskiest of names, while the big caps were down, that in itself is telling. Either it is telling that, hey, whatever bombs we're getting from earnings, that doesn't matter. The market is now concentrated 100% on the dollar going down, on yields going down, and the hopes of a Fed pivot. And the market is going to tune whatever negative news from earnings, it doesn't matter. The other thing, it could be that we're seeing flows into the small caps, once again based on the optimism of Fed pivot, but this time around, pivot team is being surgical on where they buy. They're buying the most overbeaten names who happen to be in the small caps. The names that are down 80%, 90%, they're buying those based on short covering activities, gamma squeezes, etc., etc. But they're being hesitant in buying the big caps and the names that did not go down by much. Now, back in the day during the dot-com crash at around 2001, 2002, we've seen a phenomenon where the names that crashed first, the names that crashed back in 99 and 2000, and by the time of 2001, 2002, they were down 80, 90%. We saw these names rallying and bottoming before the market bottomed, before the big caps bottomed at the time. So we have a bet here that this is happening again. I disagree, but perhaps this is the thinking behind the flows in the IWM. And for now, the bulls would say that this is a bull flag consolidation pattern, and the next stop would be the resistance at around 183 and a quarter. However, the bulls would say the IWM will go down further and then form what it appears to be a head and shoulder formation. And that would be the top, and down we go. And therefore, tomorrow will be a decisive day for the IWM. Here's the Dixie, the dollar index. What's going on here? It is melting down. It lost the support of 110. We have negative divergence on the RSI and the MACD indicators. But the question now becomes, where will the dollar rebound from? We have a trend line in yellow. That could be it. But perhaps a better way to answer this question is, what was the reason behind the drop in the dollar to begin with? How about the rally in the British pound? So here's a chart of the British pound, a daily chart. We talked about it not so long ago. We have a downward trend, and then the chart made a higher low, and it cracked above the negative trend, but now it's about to face a significant resistance at around 1.17. The likelihood is it's going to stall at around this number. And if I'm reading the tea leaves correctly, what if the British pound stalls and it moves down, a pullback from that point on, and at the same time the core PCE comes out hot and the dollar pops higher again? I'm just reading the tea leaves here. And then what about gold? The daily chart, what's going on here? Gold did not give us the confirmation yet. Gold is having a hard time cracking above 1,671. Now, if it does crack above it by the end of the week, and most importantly close above 1,671, then we have the confirmation that the dollar will continue to go down and gold and commodities will continue to move higher. And the next stop would be 1,685. But it's too soon for now to assume that this is going to happen. And then what about Brent oil, daily chart? What's going on here? The bear flag theory is losing a lot of momentum now, because we got a big upward candle for the day. And which theory gained a lot of advantage today? The answer is the bulls theory, an ABC pattern. That soon enough, we're going to see the C leg forming if it is not forming right now, and crude oil Brent would be at 105.43 in no time. And here's the daily chart for the 10-year yield. What's going on here? We have the reversal and the confirmation. The chart is below the upper range of the consolidation pattern. But even with all of that, even if it goes down to the consolidation pattern, there is no guarantee that we're going to see yields continuing to move down. It is too soon to assume that we have the top right now in yields. Even though the theory goes, yields will go down all the way to the lower range of the consolidation pattern, then rebound higher, but it will make a lower high, and that would form a head and shoulder formation, a topping formation. And I respond by saying it's too soon to assume that this is going to happen. What if this is yet another pullback, gathering of energy, and then when we get the next inflation report, yields pop higher again, making a higher high? When it comes to the TLT, a weekly chart, a lot of improvement, but again, we're waiting for 100.28. We're waiting for the candle to be a reversal candle. This is not going to happen until the chart cracks above, most importantly, close above this number for the week. Absent of that, this is just a dead cat bounce. When it comes to the VIX, a 4 hours chart, what's going on here? It cracked below the support and now we have the gap support at around 27.32. The momentum is negative, but the chart is getting a little oversold. Can it go all the way down to 24.29 and then rebound higher? That is indeed possible, but a better rebound will be from this point on. This is what equities bears are hoping for. But until that happens, who has the advantage here? The answer is VIX bears, aka equities bulls. When it comes to Apple, a daily chart, we have some technical damage here. The chart lost 150 as support, now it becomes resistance. But did it lost a lot of momentum? The answer is not quite. The RSI remains positive, the MACD remains positive, and for all you know, this is a pullback, and then they blast higher again tomorrow. But the moment of truth becomes what happens after the bell. What happens after the report is out? So for now, this is a chart not guided by the technicals, this is a chart guided by the fundamentals. So we're not going to spend a lot of time on it. But here's Tesla, 30 minutes chart. What's going on here? Yesterday, we talked about the possibility of a reverse ABC pattern or a bear flag pattern, and the chart opened gapping down in the morning. But immediately, the dip buyers did show up, and they pushed the chart above 224.39. They gave it a shot to go all the way to 233.33. But remember, we have a major resistance at the top of the breakdown candle, which is a little below 233, maybe at around 230. The bottom line is, even though the chart did not make it all the way to 233.33, it closed pretty much at the support of 224.39. So this is bullish behavior, not a bearish one. For now, the bulls would argue that this is yet another bull flag and higher we go, even though we have negative divergence on the RSI. Now, when we look at the daily chart, resistance number 1 is gone. This is the gap. The chart already closed above that. Now we have the top of the reversal candle at around 230. The chart is stalling at around this number, facing a little bit of resistance here. And if it does pass the resistance at the top of the breakdown candle, we have yet another resistance at another gap above. So we have plenty of resistance here to stall and slow down the momentum. And therefore I said, if you happen to be Tesla bull, you should have hoped for the washout all the way down to 180. And then the chart catches a legitimate short covering rally, oversold rally with very little resistance above. But now the chart's going to face a lot of resistance. In the meantime, it's going to fix the oversold conditions. And when it does that, it's going to invite a lot of bears waiting on the sidelines. So for now, the bulls are in charge in Tesla's chart, but we have plenty of bears waiting on the sidelines. And lastly, what about tulips? BTC, Bitcoin, 4 hours chart. What's going on here? We got the retest of 20,000. It was a success, and Bitcoin blasted higher from that point on. We have the breakout we've been waiting for. Now comes the question, hey Maverick, Bitcoin is moving higher. It appears that we have risk on. The dollar is moving down. Yields are moving down. We should go long, right? But what about earnings? What about the bombs from Meta and Google and Microsoft and maybe Apple and Amazon tomorrow? To settle all of that, we have to go back to the board. The daily charts of the indices, they moved slightly bearish based on today's activities. On the other hand, yields moved toward the bullish camp. The Dixie moved significantly toward the bullish camp. Yet gold moved toward the bearish camp. Not by a lot, but it did make a bearish move because it failed to crack above the important resistance. On the other hand, the VIX moved toward the bulls camp, and the reason is it broke support, while Apple moved toward the bearish side because it lost 150. Tesla moved closer to the bulls camp with a positive closing, even though the big caps were down. And then we have Bitcoin, the most significant move toward the bullish camp today. So once again, all in all, who's in charge here by looking at this? The answer is the bulls. So for now, yes, you have bombs from earnings. You can say that this is delusional. The market is being reckless. The market is not paying attention to earnings. The market is rallying based on hopium and false hope that the Fed is going to pivot. All of this is valid, but from a technical standpoint, who has the advantage? The answer is the bulls. Sometimes it doesn't make sense. And the reason is we have 3 things moving markets. Number 1, the fundamentals. Number 2, the technicals. Number 3, the mechanics. All of them matter. For now, the technicals are in charge, and the reason is the dollar and yields are down. And this kind of covers and shadows what's going on from earnings until the cover comes off. What could be the catalyst for the cover to come off? How about the PCE, inflation? If that comes out hot, the dollar will go higher again, yields will go higher again, and then all of a sudden the market says, oh, wait a minute here. Look at these horrible earnings. And on top of that, the dollar and yields are moving higher again, and the reaction to that will be panic selling. But for now, hope is winning. The core PCE will come down. The dollar will continue to go down. The yields will continue to go down. And all of these earnings are just lagging indicators. The best is yet to come, baby. We'll see what happens. But for now, let's move on to the conclusion of this video. And what do we have on the economic calendar tomorrow? We have some GDP data coming out. The Atlanta Fed says the GDP will be positive by 3.5 points. We'll see how accurate that is. But then we have initial jobless claims. We have durable good orders. And then core capital equipment orders. But the majority of the action will be in the earnings calendar once again. In the morning, we have Caterpillar, we have McDonald's, and after the bell, Amazon, Apple, and Intel. All eyes, of course, are on Apple, and the reason is it happens to be the outperformer so far. This is a heat map for the year-to-date performance. As you can see, Meta down over 60%, Amazon, Tesla all down more than 30%, along with Google and Microsoft. The big caps are all down. Apple is only down about 16% for the year. And there are two reasons behind that. Number one, the assumption that Apple is safe, that Apple is immune from all of this global weakness in the economy. And number two, the share buybacks. The company has spent billions and billions and billions of dollars in buying back shares to keep the stock from collapsing. But as we saw from Google yesterday, the company spent tens of billions of dollars buying shares and then the stock went down anyways. So yes, share buybacks might have muffed the shot so far for Apple. But if the fundamentals come out weak, we will see Apple playing catch up with Google, Microsoft, Amazon. I'm not going to say Meta because what's going on with Meta is unique. But shouldn't Apple also go down yet another 15% and catch up with Amazon and Google? That would be the case if Apple comes out weak tomorrow. We'll see what happens, but this is all I got for you for now. Thank you for listening. Thank you for watching. And I will talk to you again tomorrow. Take care.
You didn't even come close to the big leagues. Those big guys, the money men.
That's what I was trying to go after.
I'm sorry to tell you, you got none of them.